No matter how impactful the news can be on the market will always respect technical analysis. The market cannot just fall from any level that has no significant value in the past. Fundamentals is what causes huge movements in the market. It is a catalyst in the market that speeds up the move. What fundamental traders don't realize is that the market is 90% technical and 10% fundamentals, meaning technical analysis is king. Most people trade fundamentals only, and others completely neglect it and only trade using technicals. But if you combine the two, your trading results will improve drastically. You have probably heard traders saying they are only fundamental traders and they only trade during high volatile news that causes high volatility in the market. These traders only trade when big news is being announced. So if the news is bullish, they'll be bullish on the currency pair. And if the news is bearish, they'll be bearish on the currency pair. News usually differs from currency to currency. There's some news that will affect the dollar and some news that will not affect the dollar. So it's advisable to look at an economic calendar and look at what pair will be affected by the news. So I suggest you go to babypips.com/calendar or Forex Factory. These are two of the most popular economic calendars that I know of. If you use any other economic calendar apart from those two, it's fine, as long as you are up to date with the news. Economic calendars usually give indications what time the news is being announced, what currency will be affected, and how the currency will be affected by the news announcement. So economic calendars are a very useful tool in your trading arsenal. I suggest you keep them in your arsenal as well. So usually fundamental traders only trade using news, and technical traders only trade using technical analysis and neglect the news. But if you combine these two, your trading results will improve. They will improve in as much that you will be confident in your trades because you know what direction the market is going in and you are confident that the market is going in your direction. But there's an exception to this. Most of the time, big market players use news to manipulate other traders. Usually the fundamental news will align with the technical analysis and the news will boost the move. These are the rapid movements you see occur time after time. If you have noticed, most of the time before the news announcement, the market usually reaches for a significant level, sometimes faking traders in the wrong direction. And when the news is released, a rapid movement will occur in the opposite direction. So let me give an example of how this happens. Usually, market makers push the market. They push the market to a significant level. Let's say this level, right? So the market can be in an uptrend, making higher lows and higher highs. By now, I'm sure some of you know how to identify higher highs and higher lows. For those that do not know, you can leave a comment below. I'll make sure to help you guys. So the market is making higher highs, higher lows, higher highs, higher lows, and then it will eventually reach for a significant level, aligning with news that probably may be announced at, let's say, New York Open. At New York Open, that's when most of the time news that's affecting the United States dollar is being announced at the New York Open time. So when the news is announced, the market will sharply react from this level, rejecting from this level very sharply, taking out the traders that took trades at this level. So they'll be taken out, and this liquidity as well will also boost the move to the downside. Since the market is a player versus player business, if people are losing, there are people winning. If the market is moving sharply like this, which means there are a lot of people who are losing, the market makers have grabbed liquidity and they have enough money now to cause a huge impulsive move. So this happened very recently during the last NFP on Friday, the 7th of July. NFP always occurs on the first Friday of the new month. I will explain what NFP is in just a moment. Non-farm payroll. Let's go to the chart and look at how the market manipulators tricked traders in the wrong direction and eventually moved the market in the opposite direction. As you can see here, the market broke this previous lower high and made a higher high. So here, market structure shifted. So we then created a higher low, created another higher low, had a third touch on the trend line. So we had 1, 2, 3, third touch on the trend line. So what's our expectation? The market to shoot upwards. But then last week the market was slow. So the market was slow because market makers were manipulating traders into taking these buy moves that you're seeing here. So you can see we had some liquidity grabs here, pushed the market to the upside, came back to retest the zone, then we eventually pushed upwards further, again came back, retested the same zone, pushed for the last time, and then we had a close back below the level, right? Then this was Thursday at 11 a.m. Eventually Friday came NFP, 11 a.m. as well, 11 a.m. GMT. This is when the candle was open. During the London market open, shifting to the New York open, we had this huge momentum to the downside. So the move actually started on Thursday. For those that caught the move, you saw it happen before the final movement. We had some manipulation here. Traders took buys at this level. This is why you can see these weak rejections here. There were a lot of buy orders at this level here. So traders were taking buy orders in expectation that the market will push upwards further. Because as you can see, this is a very clear market structure that price is going upwards. But then market came, created double top, and then began to shoot to the downside with huge momentum. Meaning they grabbed liquidity from this level. And again, you can see that at this level, we have this huge bearish candle. Meaning we had a lot of money being dumped down in the market. The market grabbed a lot of money from this level here. That's why you can see this huge candle to the downside. So this is how trading works, trading along with fundamentals. This was NFP that caused this move. So if you combine technical analysis with fundamental analysis, you will find yourself becoming a profitable trader. Or if you're already a profitable trader, you will find your trading results changing. Before we go further, let us define what technical analysis and fundamental analysis is for those that have no idea about them. Fundamental analysis in Forex, FX, involves evaluating various economic, social, and political factors that can influence currency values. Traders who use fundamental analysis examine macroeconomic indicators, monetary policies, geopolitical events, and other factors to determine the intrinsic value of a currency and predict its future direction. So this language is too technical. Let me simplify it in layman's language. So fundamental analysis is analyzing a country's current economic state. For example, let's take the US. So the US inflation rate right now is increasing. So because of the increase in the inflation will affect the US currency, meaning the US currency will begin to lose its value because of the inflation increase. This is also an economic indicator. So this economic indicator will evaluate whether the US currency will gain strength over time or will lose strength over time. Traders use this type of information to make a decision on whether the market is bullish or bearish. So now this information is being used along with technical analysis, which we'll define in just a moment. Here are some key aspects and examples of fundamental analysis in Forex. Economic indicators. So like inflation is one economic indicator. Fundamental analysis involves monitoring and analyzing economic indicators such as GDP, gross domestic product, inflation rates, employment data, and consumer sentiment. Consumer sentiment meaning how many people will purchase items in the near future. What's the confidence of consumers in the near future? How confident are they in purchasing products? So this also has to do with the amount of money circulating in the economy. It is also an economic indicator, meaning if there is not enough money and consumers are not confident, the economy of that country will lose its value. And if consumers are confident, the economy of that country will gain value. So if the economy gains value, the currency of the country also gains value. Hope you are with me. These indicators provide insights into the health and performance of an economy, influencing currency values. So an example of an economic indicator is NFP, which is non-farm payroll. Non-farm payroll is a widely watched economic indicator in the United States. It is the number of jobs added or lost in the non-farm sector, excluding agricultural workers. NFP data, released monthly on the first Friday of every month, can impact market sentiment and currency values as it reflects the strength and stability of the US labor market. Like I explained in the chart, NFP is a very widely watched economic indicator by everyone in the world, not only in the United States. So usually during every NFP, traders are on their charts trying to trade in the direction that the market will move in, because they know at this moment there is high liquidity in the market. So they're trying to capitalize off that opportunity. Traders align technical analysis with fundamental analysis. So let us go back to our chart. So as you can see, fundamental analysis aligned with technical analysis to create this huge move to the downside. I have this level marked out, which is also a support level here as well. This is a weekly key level I have marked out here. So price came to this weekly key level, aligned with the previous higher high, and then created a double top along with a shooting star and then an inside bar. Okay, for those people that don't know candlesticks, you can leave a comment below notifying me and I will help you. So an inside bar, or I will just make a video on a candlestick Bible explaining different types of candlesticks and how you can identify them and use them to achieve consistency in the markets. So we had this shooting star candle, then an inside bar, then eventually we began to drop to the downside, and now we have continued to drop to the downside. We came back to retest this level, we came back to retest this level, retest, liquidity, drop to the downside. So you can see there's huge money being flashed to the downside right now. But this is not a technical analysis video. This is a video about how to combine fundamental analysis with technical analysis. So for here, if you combined your technical analysis with the fundamental analysis, you would have been profitable. It looks like the news that was released on NFP was bearish news. I never traded NFP because I was taken out of an Aussie dollar trade at break even, so I never decided to open any other trade. Plus it was a Friday. I do not like taking trades on a Friday, making them last the whole weekend. So when it's Friday, I make sure I take all my profits, unless I see an opportunity for the continuation of the move. So here the news probably was bearish news. If you were in alignment with the news as well as the technical analysis, you would have executed a trade and you would have been profitable. You have seen the power of aligning fundamental analysis with technical analysis. This is a perfect example of the power of using these two instruments. Make sure you do not restrict yourself to one form of analysis. Every time before you open a forex chart, open your economic calendar and look at the economic news that might affect the market on that particular day. Then after that, you can head over to your technical chart, look at your technical chart, clean it up from the previous day, refine your levels. If your levels are still okay, do not refine anything. Then from there, you can combine your fundamental analysis with your technical analysis. Do not stick to one rigid form of analysis. Technical analysis in Forex refers to the examination and interpretation of historical price and volume data to make informed trading decisions. Traders who employ technical analysis believe that past price movements can provide insights into the future price movements. By analyzing charts, patterns, and indicators, technical analysts aim to identify trends, potential entry and exit points, and the overall market sentiment. A huge number of traders already know about technical analysis and love technical analysis. Most beginner traders are still struggling with technical analysis. Others are already thriving from technical analysis. If you do not know how to identify market patterns and everything, let me know in the comments below. Technical analysis is 90% of the Forex market, because the market moves from levels to levels and respects previous support and resistance levels that were formed in the past. The majority of traders make decisions from technical analysis. This is because the market respects previous support and resistance levels. Traders also use indicators to have a confirmation of the bias as well as confirmation to execute a trade. Here are a few examples of common tools used in Forex technical analysis. Trend lines. Trend lines are lines drawn on a chart to identify and visualize the direction of market trend. They connect a series of high lows in an uptrend and lower highs in a downtrend, helping traders identify potential support and resistance levels. So like I showed you in the previous chart, we had a trend line there where traders usually use these lines to identify where the market will potentially come to find support or where it will come to find resistance. When the market approaches these levels, traders wait for confirmation to enter a trade. If the market is aligning with that certain level, either waiting to make support or resistance, you can then look at your fundamental analysis, and from there you can use it as another confirmation for entering your trade. Moving averages. Moving averages smooth out price data over a specific period, providing a line that represents the average price over that time frame. Popular moving averages include the simple moving average and the exponential moving average. Moving averages help identify trend, direction, and potential areas of support and resistance. I explained this further in a video where I was explaining how to identify market structure. You can find the link to that video in the description below. In the video, I explained very well how you can use trend lines along with moving averages and other technical tools to identify market structure so that you can become a better technical analyst. So the aim of fundamental analysis is to assess underlying factors that impact currency values over the long term. Traders who use fundamental analysis examine a wide range of economic and geopolitical factors to form a holistic view of the market. So let's give an example of another country, Russia. After Russia was sanctioned by other countries,
we will limit Russia's ability to do business in dollars, euros, pounds, and yen.
Its ruble dropped. The ruble lost value because people lost faith in the ruble. Investors were pulling out of the Russian economy.
Over 750 companies have since curtailed operations in Russia.
So this gave a very bad signal for investors in the Russian economy. When they put out their money from the economy, the Russian ruble lost its value. This is how fundamental news also affects the market. It affects the traders' psychology because the Forex market is a player-based player. What moves the Forex market is money. This is why you have heard of safe havens. So for gold, if the world economy is melting like we had in 2008, gold will begin to gain value. Why? Because people are putting their money into gold. It is important to note that fundamental analysis works best when combined with technical analysis to make well-informed trading decisions. So even though the news is being released, the market will always respect technical analysis. Let me repeat, no matter how impactful the news can be on the market will always respect technical analysis. The market cannot just fall from any level that has no significant value in the past. It will always look for significant levels in the past and then it will respect those levels. So it is important for you to take trades off those levels so that those levels can act as a barrier where you can put your stop loss above or below these levels. Traders often combine multiple technical tools, indicators, to form a comprehensive analysis of the market, aiding them in making trading decisions. It's important to note that technical analysis should be used in conjunction with fundamental analysis to form a well-rounded trading approach. So you can see the correlation between technical analysis and fundamental analysis. If you use them well, your trading results will improve. Trust me. If you don't know how to analyze the market structure, identify key levels, I created 2 videos. One on how to identify key levels. the other on how to identify market structure or how to read market structure. You can find the link to those videos in the description below. So here's an example of a technical chart with horizontal lines, rays, and rectangles. Though I did not add trend lines, moving averages, we have a single moving average here. I do not like to cluster my chart because when the chart is clustered, your mind will be clustered as well. Similar to a room. When the room is clustered, your mind will be clustered. So I prefer to make my charts very clean for me to be able to read them very clearly and perfectly. Trading is all about psychology. So if your psychology on the chart is not on point and your chart is dirty, you will make erratic decisions that will affect your trading results. Here we have a graph. As you can see here, we have a graph where you can see that trading is 90% technical and 10% fundamentals. Here we have a chart showing us the Forex hierarchy. I got this chart from the babypips.com website. For those that want to learn how to trade, BabyPips offers a free course teaching beginners how to trade the Forex market. You can find the link to babypips.com in the description below. Here we have the Forex market hierarchy. We have the major banks. These are banks that handle asset classes that are more than $100 billion. Then we come to the brokers, the people that allow you to view the markets and execute a trade. These are the other players in the market. Then we have the medium-sized and small banks. These are banks that handle asset classes of about $10 to $15 billion. Then we have the retail market makers, the retail ECNs, hedge funds, and commercial companies. Then us retail traders are at the very bottom. So for us to say that a huge number of retail traders affect the movement of the market would be wrong. So for you to be a successful trader, you have to think in lines of the major banks. Where are the major banks looking to dump the money? Where are the major banks looking to take the money? This is how your approach should be in the Forex market. You shouldn't be thinking at the retail market level. You should be thinking at the major banks level. What is the major bank looking to do? Major banks usually like liquidity levels, the levels where we have huge supply and demand zones. I'll make sure to make a video on how to identify supply and demand zones. I think I haven't explained much on supply and demand zones. So make sure to subscribe to the channel and click the notification bell for you to be notified when the video drops. So the market makers, the major banks, usually manipulate the market and wait for the news. Usually these people already know the news that is being released, because these people have first-hand information. As retail traders at the bottom with small money invested in the Forex market that barely even moves the market, we wait for major banks to make a decision. This is how we see the liquidity in the market. So when the major banks place a position in the market moves drastically. So these are the huge volatile moves that you see in the markets, meaning huge money has been placed on a trade by the major banks or the medium-sized small banks. These people have technical analysts that are always on the charts, looking and breaking down the charts. Then eventually when the news announcement is released, the banks will flood in their money and the market will move in the direction where they have placed the trade. So it's up to you to be smart in the market. You have to be smart. This is where we have smart money concepts. There's a strategy called smart money concept. I haven't really gone deep into that strategy, so I don't really know the mechanisms of the strategy. But you have to be smart as a trader. You have to be thinking in terms of, okay, if I was a banker, where would I take the money? What would I do? Because the bankers are not in your favor. They want to take your money. That's the whole purpose of them trading. They want to take your money. They're putting in money for them to get money. Same reason you are trading, you are putting in money to get money. So the bankers as well are doing the same thing, but they are trying to fake traders into believing the market is moving in a certain direction, but then they'll move the market in an opposite direction, taking out their trades. This does not mean be fearful in the markets. If you have a good trading plan and a good trading strategy that has been proven on a demo account, you will have no fear in the markets. But if you come into the Forex market without a plan, without a proven strategy, you will find yourself failing, and eventually you will have a mental breakdown. The Forex market is very psychological. It has a lot of psychological effects. People just think the Forex market is all about making money, but it is hugely about psychology. Psychology. I cannot emphasize enough on how important psychology is in the Forex market. Before you come into the forex market, if you do not have a written down plan, if your plan is not tested, I suggest you do not fund a live account because it will mentally break you. Other people, this is when they give up totally on forex. Other people realize that they need to do more work. So it's up to you to be smart. It's up to you to begin making a plan, testing out your plan on a demo account. This is the reason for demo accounts. Why do you think demo accounts were made? This is for you to be able to practice your strategy and figure out if it is a profitable strategy or not. How do you figure out if it's a profitable strategy or not? By looking at your account size. Is your account growing? Are you journaling your trades? Are you tracking your trades? It is important to journal your trades. If you don't know how to journal your trades, I have a video on how to journal your trades. I'll leave the link in the description below. Make sure you journal your trades. It is a very important habit because this allows you to identify whether you are improving in your trading or whether you are not improving in your trading. So make sure you test out your strategy and find out if you're a profitable trader or not. Key takeaways from this video. The market is 90% technical and 10% fundamental. Technical analysis is boosted by fundamental analysis. So the second key takeaway, using technical analysis with fundamental analysis increases my chances of winning. That is in your case, not in my case, not my chances. My chances of winning, yes, can increase, but I am putting this as you. So read this as my in terms of you. Hope you understand what I'm trying to illustrate here. So using technical analysis with fundamental analysis increases my chances of winning. Using both fundamental and technical analysis helps me be confident in my trades. Using both technical analysis and fundamental analysis helps me be confident in my trades because you have a solid foundation of why you have executed the trade. Not only because of it has reached a certain Fibonacci level, it has tapped a certain trend line or a certain support and resistance or formed a certain candlestick reversal pattern. The news that is being released is also in align with your technical analysis. So this holds a very significant value to your trading decision. Though you do not have to solely hold on to your trading decision as the sole truth, because most of the time the market goes against our analysis. Our analysis may be on point, but sometimes the market is the market. We may be taken out of the trade. The last one, market makers use fundamental analysis to manipulate traders. We just saw that as well. Market makers use fundamental analysis to manipulate traders. For inquiries, you can contact us using our email, magnafxinstitute@gmail.com. You can also find us on Instagram at magnafxinstitute. If you have any questions, you can leave them there. I'll make sure to reply to your questions. Thank you very much for watching the video this far. See you in the next video.